After some roller coaster price action yesterday, Bitcoin once again hit a new all-time high and seems like it's going to just keep hitting new all-time highs every day. But more importantly, Michael Saylor has made the claim that Bitcoin will eat gold, and inflows into Bitcoin products and outflows from gold products seem to indicate that that may actually be the case. I'm so excited to have two of my favorite guests here. We've got James Butterfill from CoinShares and, of course, Matt Hougan from Bitwise and Chris Inks, Texas West Capital on the back. We're going to talk about what's happening with Bitcoin, where all these inflows are coming from, and what we can look forward to as they continue. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of Wall Street. Before we get started, please subscribe to the channel and hit that like button. I saw that quite a few of you guys tuned in last night to the new Alpha Show with Joe Visani from Lunar Crush. First show that I wasn't on. It was weird being in the comments on my own channel, but I'm glad that we're able to expand here, offer you guys new content. So I suggested if you didn't watch it live last night, that you go ahead and check it out on the channel. I'm going to go ahead and bring on our two guests today. We call this Three Men in Front of Cream-Colored Walls, the Wolf Edition. We were trying to get James to get a curtain, but we couldn't get one in time.
Sorry,
but
sorry to disappoint.
Yeah, sorry. It's okay. I won't hold it against you this time. But listen, we've got a massive day yesterday, Matt, right? Bitcoin I-74K is Bitcoin ETFs record 1 billion in net inflows. I believe the best day was between 607 million before yesterday. Is that correct?
That's right. Yep. Trace commas yesterday. Pretty big day.
I mean, 1 billion in inflows in a day. We said maybe 9-10 net inflow, kind of hard to calculate thus far. So that's 10% of all inflows in a single day. And they continue to rise seemingly every single day, even in the face of actually somewhat increasing GBTC outflows.
That's exactly right. The demand for these ETFs is off the charts, right? They're obviously the strongest ETF launch of all time, and it seems to be accelerating. And there are reasons to believe it will continue to accelerate. I'm on the road right now talking to financial advisors and platforms, and they're just turning on these ETFs. So this was the first $1 billion day. I don't think it will be the last. We bought 15,000 Bitcoin yesterday. That's 16 days of new supply. The demand supply imbalance is really remarkable. So yeah, new all-time highs, and I don't think we're done.
James, what is this? Go ahead, please.
Yeah, there's an interesting point here. We in 2021, the best year for flows, we saw $10.6 billion. This year to date, we just hit the $12 billion mark. So this is the largest year for inflows, and there is that link between price and flows. And I think we're experiencing now a demand shock. So in the commodities world, China's a good example. The early noughties, steel prices went up 800% with the property boom. That was a demand shock. But usually there's like a supply response, i.e. like miners, they mine more iron ore and they produce more, they increase the supply. Obviously that can't be done in the Bitcoin world. So, and to make it worse, we're having the halving. So we're going from 900 to 450 a day. Suddenly, this is what's really pushing up prices. Quite an exciting time to be in the market.
Yeah, I'd say to make it better on that one rather than to make it worse, because that seems to be positively affecting the price, right? You have spot Bitcoin ETFs capture 90% of market share, leaving futures ETFs in the dust, right? So BITO, all of those, they're afterthoughts. It's happening much faster, I think, than we thought. Futures ETFs are inferior products. We know that. But James, really quickly, what's happening to the rest of these products that were either acting as Bitcoin proxies? We talked about miners a bit. I would love to get into that before. What's happening to everything else? We'll talk about it eating gold, but it seems like the spot ETFs are eating everything Bitcoin related at the moment.
Yeah. I mean, on average, Bitcoin miners last year, they were up about 130%. So that was really good. This year, they're down, which doesn't seem to make sense initially when you think about it, down 45% on average. And I think it's because people are freaking about what happens at the halving to these Bitcoin mining companies. We've done a lot of work into looking at average cost of production for each Bitcoin mining company. So Clean Spark at one end, 26,000 per Bitcoin after the halving. But something like New Hut, it used to be Hut 8s at 90,000, we estimate. So, after the halving. So there's real divergence in fortunes, but I think the market's being pretty cruel on most of the miners, and they're down a lot this year. And I think that's a great potential opportunity. Those that have been kind of unduly punished from a price perspective, and yet they're going to survive the halving and do quite well, in fact. And I think the market's missing that at the moment.
So we're going to throw the baby out with the bathwater. Basically, for once, you can't just say all miners are good, all miners are bad. You have to find the ones that are actually going to be profitable after the halving. But right now, I've heard the miner floor is roughly 45,000. We're trading at $73,000 Bitcoin. Until the halving, all of them are making money right now.
Yeah, exactly. And well, the post-halving floor is about 45,000. So I think well north of 50-60% will be fine as long as the prices remain above that point. I do, like, historically we do see hash power decline, so they turn off rigs. That's most likely going to happen given how competitive it is and how high the difficulty is. But I think given the price environment, that hash rate, whilst it might fall, will recover very quickly as people buy new mining rigs.
So, Matt, I think people that understand agree with James. They're probably scared of the halving, but I think your average retail person who probably was investing in miners is just FOMOing out of miners and into spot ETFs. Do you agree?
That's right. I think it's both of those things at once. I think it's people afraid of the halving and it's substitution. And we've seen that in the past. And I think people are getting it wrong. I'm with James as well. I mean, I'm looking at Riot's chart. Riot's down 25%. Bitcoin's up 73% this year. That's a 100% spread. I also think the miners generally are in a better position now than they were before 2022. I think 2022 shocked the miners, and many of them have cleaned up their balance sheet. I think they're better positioned in aggregate. I agree that not all of them are well positioned, but they're better positioned in aggregate than they have been in the past. I think it's an interesting trade.
Gold's an interesting one too. We've seen gold outflows, fund flows of $20 billion since the start of 2023, and Bitcoin's seen $13.5 billion of inflows since 2023. So definitely there's this substitution. People are looking for assets that diversify, that are gold-like, and I think Bitcoin really fits that bill and actually diversifies way better than gold does. So it's kind of a no-brainer and why we're seeing such demand this year.
You gave me a great segue into the title, which was Bitcoin hits new all-time high and will eat gold. That was based on the fact that rapper Drake, you guys may have missed this, but Drake shared a Michael Saylor video to his Instagram. He has hundreds of millions of followers or something. And it was the core of it. We know that Drake's kind of a Bitcoiner. I think he made $1 million Bitcoin bet on the Super Bowl in 2022. But this was the interview from Saylor, a really quick clip talking about gold exactly.
Certainly at least digital gold. It's going to eat gold. It's got all of the great attributes of gold, and it's got none of the defects of gold. If you could teleport gold from New York to Tokyo in a few minutes, people would like it.
He also said this just
to be a currency, or do you think it ever becomes a quote unquote currency?
It doesn't have to be a currency. Nobody's trying to buy a cup of coffee with a fraction of their building on Fifth Avenue. Right?
I mean, is this the correct positioning for it? Because it's ironic. We're saying, Michael Saylor is saying that it's digital gold, it's better than gold, but flowing out of an ETF and into a spot ETF in Bitcoin isn't exactly like owning it as a store of value. There's something different here, right? So there's the trade, and then there's the Michael Saylor, you should self-custody and own it and hold it forever mentality.
I was just having this conversation with a client earlier that in many ways Bitcoin is very similar to gold, but you just can't sprinkle gold down a telephone line. So exactly that point. But it is different to gold in an important aspect in that it is, from an investment management perspective, it's a growth asset. It's connected to stuff that's growing on the internet. And that's something gold doesn't have. And that's what's really, I think, compelling for a lot of people who really like gold, that Bitcoin has this store of value component. It also has this growth component.
Yeah, I think that's right. It's also just better in a portfolio than gold. The problem I've always had with gold is gold itself may hedge against inflation if it was 100% of your portfolio. But if you're adding a small amount of gold to your portfolio, it doesn't have the beta to hedge the rest of your portfolio against that risk. And Bitcoin right now has that beta, by which it means it can go up a lot, which gold just historically can't do. It doesn't move that much. So I do think it's eating gold. I think we're going to stop framing Bitcoin's potential as a fraction of the gold market and start framing it as a multiple of the gold market. I think that's going to be a shift that people make during this cycle, which is a big shift.
I really agree with that. You know, if I say to a client, oh yeah, Bitcoin's going to 100,000, they think I'm a little bit mad. But then if I say, you know, what is the Bitcoin's price if it comprises 14% of gold's market share? That's 100,000. And in that perspective, it doesn't seem so unreasonable in that point that it could eat a lot more than 14% of gold's market share.
Yeah.
So it could be well north of 100,000.
I think that's exactly right. You know, people used to laugh at the things Saylor said. It's like gold without the defects, but that's really true, right? Nostalgia is not an investment thesis, which is what people are sort of betting on when they're betting on gold. And it really has, you know, most of gold's characteristics and then better characteristics. So yeah, I think it's going to be multiples and not percentages. And that means those price targets, as James said, they can get much larger without it seeming ridiculous.
Yeah, James, you said you can't sprinkle it down a phone line, but I found out in college that you could sprinkle it into terrible alcohol and get very sick from drinking it. If you've ever had Goldschlager in the 90s, but yeah, Matt, I'm curious if part of your pitch now. This has been my pitch to no coiners, is exactly what you guys just described. I've been using the even if you hate Bitcoin, it improves your Sharpe ratio argument. That's how I've been approaching people. And then maybe we'll get them into the actual important attributes and reasons to hold it in the future. But you're on the road right now, Matt. I talked to Ryan and Juan on Spaces in the last week. You guys are just no sleep till Brooklyn, out there just, you know, in hotels and pitching in these small rooms at RIAs. Are you selling them Bitcoin? Are you selling them all of the above? Or are you saying, listen, this just improves your portfolio, get it in there?
That's right. My life is a series of beige curtains right now, which is fine. Wouldn't have it any other way. It's different. There are actually two narratives that are really working right now. One is the price narrative and the supply demand dynamic. Investors can easily understand that. And they don't want to be the ones who looked at this, passed on it, and 3 years from now, 2 years from now, 1 year from now, their clients said, why didn't you invest us in Bitcoin, right? They don't want to answer that question. So that's part of it. I tweeted about this earlier. The other thing that's really changed from past cycles is I'm hearing more advisors worried about the US debt, worried about the fiscal situation, and using Bitcoin as a release valve to hedge their clients against that risk. That wasn't visceral for professional investors in previous cycles. I don't know if it's the election. I don't know what's driving it, but in each of the, say, 7 meetings I've had over the last 2 days, that's actually come up as one of the theses. So some people price, some people sort of economic fundamentals, and Bitcoin can welcome them both in.
We have a survey with all our clients and asking them, you know, what's stopping them buying Bitcoin or what are the key worries. And a government ban and regulation comprise 70% of the responses. You know, so they're seriously worried about it. And, you know, we wrote a paper called A Little Bitcoin Goes a Long Way 4 years ago. And it's kind of, people agree with it and liked it, but they said, oh yeah, but you know, it's the government could ban it. I mean, what if? And now that argument has completely disappeared. It feels like it's very hard, I think, to resist. Once the clients understand it better, it's very hard for them to resist what's quite compelling sort of portfolio diversification argument to add Bitcoin to portfolio.
Yeah, Matt, I said this to Ryan yesterday. Ryan, by the way, works with Matt at Bitwise, one of the researchers also on the road. But I said, it seems like you have like a 3-pronged challenge when you enter these rooms. You have to sell them on Bitcoin. Then you have to sell them on the actual ETF and add it to their portfolio. Then you have to sell them on BITB as the one that they should buy, right? Or the one that they should approve. So it's kind of like you have to educate them on Bitcoin, get them to want the ETF and understand how to buy it, and then tell them yours is the best one to buy, right?
That's exactly right. That's the 1, 2, 3. I love that. Fortunately, there's strong arguments for each of those. But a great thing is actually what James said. You no longer have to deal with some of the FUD. You don't have to worry as much about government banning. That doesn't come up. Tether doesn't come up. Criminal use doesn't come up. You know, many of those traditional things that we used to spend 60, 70% of the meeting talking about, those have honestly just disappeared over the last 3 or 4 months. And that's a real change. Those were holding Bitcoin back, and now they've just been released. And
is that simply because the ETF's been approved and that was the stamp and that's all we needed? Is it Larry Fink out there? Is it because it seems like, I mean, we still have the anti-crypto army raging about terrorist financing. right? We have the digital asset mining, whatever the tax that's being proposed again in the 2025 budget by the Biden administration, a 30% effectively tax on Bitcoin mining that would kill it in the United States. So those narratives are still coming from the people that are actually in power. It just seems like nobody cares. Just like nobody seems to care about Gary Gensler anymore. They don't fear him because they keep losing. It just seems like it's still there. It's just being ignored.
I think that's right. I mean, those are they cried wolf for years with those narratives, and nothing happened. I do think the ETF is just a watershed moment. Larry Fink is a watershed moment. BlackRock is a watershed moment. Soon, Morgan Stanley, UBS, etc. I think there's just no way people realize there's no way the genie goes back in the bottle, given how far we've come. So those narratives are still there. I'm not so sure there's an army anymore, Scott. I think it may just be a few people rattling spears and trying to be loud. But I'll just say that investors are no longer worried about it, whether it's BlackRock, whether it's ETFs, whatever.
It feels like a scene in the movie where Elizabeth Warren's like run out in front of her army, like in Braveheart, to go fight, and then you turn around and everybody betrays her and slowly trickles off into the woods. That's what it's starting to feel like to me. Go ahead, James.
Matt, I agree with 2 of your 3 points in terms of the pitch. The third point is we must consider BRRR, so Bruce from Valkyrie. So it's known that CoinShares has just acquired Valkyrie, and so we also have an ETF. So just throwing that out there.
Yeah, that has happened. I'm a Valkyrie investor. Didn't go that great for me, but I'm glad for you guys at CoinShares. BRRR has actually, I mean, I think it's generally underperformed, and probably because maybe it was in this phase of transition. Van Eck was also trailing, but I believe I want to bring it up. I believe they just made a pretty big strategic move here, right, Matt? They saw a huge inflow day. They've waived their fees for a year or until they reach 1.5 billion AUM, and I believe they're giving the profits to Bitcoin core contributors to the. I mean, there's so much jockeying still here happening in the background after all of this success. I think there was this impression that the whole pie would be $3 to $5 billion or something like that, maybe 10 in a year, and that most of these would just go away. But it seems like there's just so much interest that everyone's actually kind of doing well. I mean, you guys got to 2 billion in yours, and you're still behind GBTC, BlackRock, like these huge names. But 2 billion, you guys can ride for a very long time with low fees at those numbers.
We're really happy. For what it's worth, we love BRR. I love HODL. I love seeing more crypto native managers gathering inflows. And so I love that all of these companies are doing exceptionally well. That's right. The pie is bigger than people thought. And I think ETF managers realize that this is a decade-long play. This is a play that's just getting started. We're in month 2, but these inflows are going to continue for a while. There'll be more products, so people are establishing their footholds. We're thrilled to get to 2 billion. We think we'll be at 20 eventually, and I think BRR will be hugely successful as well. And that will be great for Bitcoin. It will be great for everybody.
And one of the reasons why I think the flows will be sustained is so far the RIA market has been pretty much closed. I think Carson Group is the only one that's really allowed greenlighted Bitcoin ETFs. And now as Vanguard and some of the others open up that market, there will be demand from there too. And so I think someone heard it's a $50 trillion market there from the RIA. So, we could well see these flows continue for some time.
Wait, is Vanguard actually going to open it? Because last I checked, we were boycotting Vanguard. I might have been the one who started that hashtag. I'm not going to make any claims. I switched away, but we know their CEO left, and the Bitcoiners love to pretend that had anything to do with Bitcoin, but we all know rationally that it didn't. But I mean, Vanguard would be a huge unlock. I mean, Matt, you said we do have Merrill now saying that they're coming online. We know that there are others. And James, you made the best point, which I've been making. It sort of ended up being bullish that nobody had access to these things because it's keeping a trickle out of the demand spigot instead of that early flood and then having it turned off.
Yeah, I mean, I totally agree. I mean, it's hard to see a downside picture for Bitcoin prices at the moment, just given how strong the demand is. Yeah, I did see in your comments section on Twitter that someone said a lot of flows in could mean a lot of flows out. And I think that's the beast. At some point, you will see some people taking profit at some outflows. But in the face of cutting interest rates this year at some point, the halving, the ETF demand, it's hard to foresee it in the near term at the very least.
Yeah, I think what we see happen is kind of what we saw yesterday. You know, Bitcoin's wild 4 hours, new record of 73K, tumbled 69K, rebounded to 71K, 360 million in liquidations. I think what we see in those is we get this fever pitch in leverage, and there's this underlying spot demand. The leverage gets flushed. We see these big drops, you know, and then it goes right back to where it was, right? So it kind of explains this crazy price action. Literally all you have to do is have bought Bitcoin and waited.
What's really interesting is looking at the futures market positioning on DevvE and a few others. We aggregate the data together, and you know, when we saw that correction at 69,000 down to 59, that was kind of obvious because we saw a lot of futures positioning around that kind of level. And now we've smashed through that. There was some positioning at 70,000. We smashed through that. Now, if you look at the futures curve, what price point is the largest positioning now? It's 100,000. So it doesn't feel like there's a huge amount of resistance between here and 100,000.
Massive contango. Yeah, Matt.
I absolutely think that's true. I mean, I think there's a behavioral answer for that, right? The price will rise as long as demand outstrips new supply until long-term investors sell. And they're humans, so they sell at known levels. They sold at all-time highs. That wasn't surprising. They'll sell at 100,000. That won't be surprising. So those are the obvious walls. And I do think there's not much between us and $100,000.
But hey, kids, if you want to leverage, I just want to say really quickly, if you want a lesson on leverage, the people who are getting liquidated are long. These are people who are betting on price going up, you know, at first, and they're just too over leveraged. So somebody just crushes them, makes a bit of money by pushing price down, it goes right back up. So all you ever have to do is just hold Bitcoin and watch it go up. These are people primarily who are betting the market going up and getting liquidated. But go ahead, James.
Yeah, I mean, a lot of clients starting to say now, okay, it's all-time highs. Why should I buy now? And, you know, I think the futures positioning point is important, but I also think it's just important to take like look at a bigger, longer term picture here than just how much it's run up in a very short period of time. Just the point I made about gold earlier, you know, 100,000 is only 14% of gold's market share. I think that's a very good rationale, and the diversification merits suggest, you know, hodling, buying and holding for a long period of time, essentially.
Yeah. I would add, I think that's actually hugely important. One of the biggest pushbacks I get from people today is, are they late? And that's why those sort of Twitter jokes, like it's $0.07 million, are actually relevant, right? You do need to show people the size of this opportunity so they don't feel like they're late, right? It always feels at this stage in the cycle that you're late, and I don't think people are.
Did anyone
who's ever bought Bitcoin thinks they're late because they meet someone who bought it 6 months ago or 6 years ago. 2016 class hates the 14 guys. The 14 guys hate the 12s, and the 12s really hate the 10s, you know? So
I've seen a few tweets comparing Michael Saylor to Bunker Hunt. I don't know if you've seen these, but what's interesting is, you know, Bunker Hunt in the 70s cornered 1/3 of the market, the silver market. I mean, you can't compare it. I mean, Saylor's got 1% of Bitcoin. I mean, it's just not the 33% that the Bunker Hunt had. So I don't think Saylor's a systemic risk to the Bitcoin price.
And Bitcoin has slowly, and Bitcoin has just eclipsed the market cap of silver. And like I think kind of underreported or undernoticed this week, but Bitcoin's now a bigger asset than silver. It's insane.
It is amazing. It is amazing, but you know, just getting started. But it is amazing.
Matt, I want to circle back to the point that we were talking about before I started talking about price, which was this kind of slow trickle of unlocks of RIAs. Speaking to your team, I know you guys have been convincing a few of these, I guess, smaller RIAs, $1 billion, $750 million here, to start allocating BITB in 1% or more to portfolios. And we haven't seen any of that yet. But that narrative is really happening, right? That this is going to be a percentage of everyone's portfolio that they manage and passively without you having to call and request it.
That's exactly right. I was just on stage with an advisor at a conference. I didn't know this, but he had a 3% model allocation for all of his clients, you know, manages multiple hundreds of millions of dollars. I actually think that percentage, Scott, is going up. It was 1% previously. It's now more like 3% for aggressive portfolios, 2% for moderate portfolios, and 1% for conservative portfolios. So these advisors that have discretion over their client assets, meaning they decide what to invest in. They're putting these ETFs into their models and automatically investing. As more money comes in, they'll buy more. You know, that's how this thing scales. That will ultimately impact how this asset performs too, because these are long-term investments. They're also rebalanced regularly. I think it'll have a small dampening effect on volatility, but it's a big deal. These are tens of trillions of dollars waiting on the sidelines. It's just starting to come in.
But James, that's tens of trillion dollars that's starting to come in that has no decision making behind it. That's the difference here. We see BlackRock talking about, you know, a percentage in their global allocation fund, whatever it's called, and another fund. This is when it gets really interesting, because this isn't convincing a client to buy something. This is them having no idea that they have Bitcoin in exposure, and it's just in the fund that they buy. Correct?
Yeah, and if you are sort of tracking some sort of index, that's absolutely right. A lot of people probably don't realize that in their pension fund, they probably own MicroStrategy because it's in the S&P 500 right now.
But people love to say that BlackRock owns 10 or 15% of MicroStrategy as if that was like Larry Fink called and did, you know, an earnings report and did. That's passive. They have to do that to index.
You know, most fund managers, they risk budget and they'll say, okay, well, I've got X amount of risk to buy some sort of asset. So if you said, okay, I've got 100 basis points, 1% of risk budget. So you're happy with it going up, your volatility in the portfolio going 1% on an annualized basis. Actually, that at the moment, if you look back just at the last year of vol of equities and bonds and Bitcoin together, that would suggest an 8.5% Bitcoin position, just with 100 basis points of additional risk when you're regularly rebalancing. So so I think there's a very compelling story to add Bitcoin. If you're worried about the volatility, just do regular rebalancing.
That's right.
Isn't the volatility the boon? That's the whole point. But yeah, go ahead, Matt.
Volatility is a boon, particularly if you rebalance. I just add one more perspective to put on like a Vanguardian hat, to put on Jack Bogle's hat. His core thesis is basically you should own the world. You should own the world's capital assets. You shouldn't bet on this or that. Just own the world's capital assets. Right now, you know, Bitcoin's $1.5 trillion. US stocks are 50 trillion. If you have 0% Bitcoin, you're like 2% under allocated to Bitcoin. You're effectively short this market. If you just own the world's assets, you need a 1% exposure to Bitcoin. That should be the starting point. If you're under that, you're short this asset class. And I think that's sort of a game changer in how people think about this market.
Yeah, as we come to time here, is there anything I missed that you guys want to make sure that the audience knows here?
I think that's it. There's not much.
I think we covered it well. But I mean, Matt, is there anything else you're out there pitching that you know, we might have missed here?
I would just know that there are a lot of people like me on the road right now talking to trillions of dollars of assets. I'm on the road for 20 straight days, and I'm not the only one. And I think that means we are still early in this process. There's still large unlocks coming. So it's an exciting time.
I just want to bring up one of those guys who's not on the road. Jamie Dimon defends right to buy Bitcoin, even though he never will. I mean, this has made news, but he's always said that. Isn't that just the obvious position?
Oh man, never say never, Jamie. It's tough to have that on the record. Yeah, but that's happening everywhere. They have trading businesses. They're building in this space just like everyone else. You can't not.
JP Morgan coin, not Jamie Dimon, right, James? I mean, JP Morgan will be here just like everyone else.
Well, I'd say it's a lot safer buying Bitcoin than it is buying cigarettes. That's all I'd say.
There you go.
You're saying that Jamie Dimon hasn't been on the right side of history multiple times in the past? How dare you? That they don't pay, they're the classic, like, everything we've ever done wrong, let's just throw it as a criticism at Bitcoin and like wag the dog, because money laundering, all the KYC, AML, that they've done it all, right? Of course. Well, guys, thank you very much. James, you're not invited unless you get the curtain next time. The wall is right,
okay,
but
sure.
we need the curtain.
I'll make it
so. Just kidding, guys. You're both amazing. Thank you so much for taking the time this morning. Thanks. See you soon.
Thanks,
guys.
I'm trying to like DJ this stream on a tiny little laptop instead of with multiple streams, moving things around. It's kind of fun. It's a big challenge. I do want to play you guys a quick video since we circle back with Michael Saylor and I see you guys talking about it in the audience. I don't know if this is a top signal, but I laughed really hard when I watched this. So we're just going to do this before we bring on Chris really quick.
But like most of the people who are buying assets at some point want to sell the assets at a profit.
People that use fiat currency as a store of value, we call them poor. We call them poor. People that use fiat currency, we call them poor. call them the poor. We call them the poor. We call them the poor.
Good.
There's a name for them.
That sounds like something I would have made, honestly, in my DJ career. I used to make sort of these joke tracks, but man, that's good. I think we might have to like reincorporate that music into some of our shows. I know you guys love my trumpets, but maybe we'll have to incorporate that. And really quickly, before I bring Chris, I got to talk to you, of course, about DevvE. You guys know I've been talking about them endlessly. Got a brand new website, our sponsor once a week on here. So now the website's amazing, really explains everything that they're doing. I've talked to you guys about the incredible team that's involved in this, the people that are building this, but also all the things that they're doing. You can really get that entire informational download here on their website. I suggest you check it out. They're really solving a lot of problems, or at least addressing a lot of the criticisms of the blockchain space, and they're getting a lot of regulatory approval for doing that and working with some of the largest corporations. A lot of it I'm not allowed to share yet, but I can't wait until I can. Nothing in it for me except for you guys clicking on the link and making me look good, I guess. But I ask that you check them out. They're amazing. And yes, Little Bubble is great, to those of you guys mentioned it there. All right, time for us to look at these charts. Bring on a guy who's going to say, of course, we're at 73, 72, whatever the price is right now. What have I been telling you the entire time I've been on this show? Chris, are you shocked?
Of course we're at 73, 72, whatever it is. I've been talking to you guys, telling you that's going to happen, right?
You have. Where are we at? 72, 820 right now. I'm going to go ahead and bring it up. I mean, what are you looking at right now in Bitcoin?
Man, nothing's changed. There's a lot of similarity between the breakthrough, the all-time high here in 2020 to 2017. And we've got pretty much the same thing here. It's just, this took us 2 weeks. We broke out just above it and then pulled back and then rallied back up in 2 weeks. And then that third week, we kind of broke out. This one, we did it all in 1 week there. And here we are breaking out. Man, I keep changing targets here because we continue to be aggressive. We continue to rally stronger. If you remember a while back when I finally, when we got the breakout over here and I changed to this alternate count and I said, okay, we've got this at the time away circle 3 target up here at 75. Things have changed. I mean, we look back and we go, well, the ETF flows you guys were talking about. What a great show today, man. I love Matt Hougan and those guys over at Bitwise. Seriously, they're out there with the community so much. And
unbelievable. They're on every single show, and it shows they're at 2 billion AUM versus all the other crypto natives who are trailing. And there was no really solid reason. Yeah.
Exactly. And so, again, $1 billion net inflows. I mean, it's ridiculous. And I mean, we can't ignore IBIT jumping in there with 560 million inflows themselves. When GBTC had that huge day of almost, 400 and somewhat.
BlackRock's at 15 billion. They're at 15 billion.
We're just over 2 months into this. It's so crazy. So my targets have changed. I move them into a gradually more aggressive kind of situation, and that has us up now with about 110,000. So I've got this as a 1, 2, and then a 1, 2, 3 here at about 110,000. Ultimately, with this right here, if we're getting this, we kind of fall through with what I'm kind of looking at. I mean, man, we're looking up there like 240,000, and it doesn't mean it can't go higher. Also, something else I'm working on. What if I kind of floated this out there on Twitter recently? What if we've got one more cycle still to go? So everybody's been talking very much about end of the world, blah, blah, blah for, 3 years now, right?
Come on.
But what if we've got at least one more cycle here? And so I've gone back in Bitcoin. I'm going back here and I'm redoing the count. And I'm seeing a possibility that we could still have one more. And all of a sudden, depending on how these ETF flows continue, over the next few years, Kathy Wood says some crazy things, it seems like, but we thought it was crazy to hit all-time highs before halving, right? So
you can just look at your chart right there. It looks like a 1, 2, 3. So where's 4, 5, right? I mean, even if you just look, I'm not an Elliott waiver, but my brain says that when I see it right there. I don't think those are hyperbolic price targets at all. And I do think we have more cycles. Every time we get this time is different, super cycle, blah, blah, blah. We get the 85% correction. Everybody says it's dead. And then we go back up. And by the way, people, I see like you over here say 240K, I just passed out. Guys, talk about hyperbolic. That was my target for last cycle. When 65 broke and we went to 69, I thought we were going to 230. Like I really did. So nothing surprises me now. Yeah.
Yeah, but I mean, it's there. You know, the structure is there. The possibility is there. I'm not saying that we have to do all these crazy things, but what I am saying is if you're in this and you're not really kind of considering this possibility and looking at what's really happening, I think you're doing yourself a great disservice. Again, I talked about it before. I think by the time, you know, we've got usually like this 90-day, 120-day kind of period where these very large RIAs, these very big RIAs kind of go and they do their due diligence, right? They don't want to get you into an ETF, you know, that's going to fail. And so they go for, 90 days, 120 days, whatever. They're looking, they're watching, they're doing their homework. Remember, a lot of these guys don't really have much of a clue about Bitcoin. So they have to go and they have to learn all this thing that a lot of y'all are here and you already know because you've been here for years, right? But these big platforms, they will actually allocate for their investors. And so the investor won't even know. They'll just be like, yeah, we decided 2% in here or 5% in Bitcoin or whatever, and they're allocated to it. And I think we start seeing that here, as we start getting into summer, which, what we're getting now is not even that. What we're getting now is like the bottom rung, basically, of what we can get for the ETF. So I think there's a good possibility we might even see these flows just kind of continue to accelerate into the summer and through that. And if they do, things just get really wild because guess what, guys? A lot of people talk about the halving and how it doesn't, they're like, oh, well, just remember, it's just the future supply that's halved. And they're right, it is. But if we keep having this ridiculous, voracious appetite from ETFs, where in the hell is all this extra Bitcoin going to come from? Right now, there's buyers at all levels. There's always buyers, guys. And as price goes up, you're going to find buyers. But the reality is price will have to go up because you're going to be taking everything that's coming new plus whoever they can get from the sides as price continues to go up. So I think, something I've talked to you about a long time, Scott, and something I continue to tell people about is even if you're a trader, you should have a bag of Bitcoin in a wallet that you don't touch. Don't make it easy to trade with because once you kind of mess up your other wallet you're trading with, you're going to, oh, it's so easy to pull it over. Don't do it. Just leave it. It's your protection against yourself and just enjoy the ride.
I've always been and it changes, but I've always believed, or at least I was taught long before crypto, in the 70-15-15 portfolio, right? 70% investments, 15% to trade, 15% in cash so that you're able to buy the dip.
Yep.
Pretty simple, right? So like, I think even the most sort of accomplished traders know that your investments are likely to outperform you.
Yeah. I mean, and that's what people that trade for a living. We always take that position that those are going to do it. And, having the skill of trading there, you can, if you do it right, you can kind of figure out where these macro tops and bottoms generally are, allows you to get into your investments early. And man, it just looks good. So, yeah.
Yeah. And today, by the way, I think someone said in 15 minutes in the comments, but I knew it was today, the Denkun upgrade is coming for Ethereum, which is going to bring layer 2 fees basically down to 0. And seemingly nobody's even talking about that. So what else you got there beyond Bitcoin? I agree with the high targets. We'll see. What else you got?
All right, real quick here. We talk about Ethereum, Bitcoin. I think I'm going to talk about this kind of more regularly. But again, here's the Wakofian structure here, this reaccumulation structure. I don't have it all labeled here, but basically your price action and your volume look amazing through this. You've got a little bit of a spring here on some low volume, especially when compared to your selling climax over here, this automatic reaction selling climax. So, I mean, again, I'm still looking for the breakout here above this weekly pivot at about about 0.06. And then I think even if you're just kind of really not aggressive at all, you should be looking up here toward the top of the range up here, 0.08, 0.09. But I do think, again, we do break out there based on the height here. I don't have it drawn on here, so let me grab it real quick here. I think we've got a minimum expected target up there at around 0.129 at least. So, again, and they say, oh, but if Bitcoin's doing all this, then Bitcoin rallies and Ethereum rallies with it, right? Ethereum is just going to rally at a greater clip. That's all. And so, yeah. So
we've seen it every cycle.
I like it, man. I like it. The other thing I want to tell you, everybody's getting all excited about Litecoin all of a sudden because it had a big move there right over here. This is the weekly chart. So we had a big rally up, a pullback, another big rally up, and here we go popping out again. Really, this looks like a giant fourth wave, guys. This looks like reaccumulation. Look at this. Look how long this is from December of 2017. Oh my God, that's like 7 years here leading into this accumulation. So yeah, so I'm looking for this thing to really break out here, and based on the height here, and you're about to see a lot of hate if I say this, but 2486, $2,486 is where that target is based on the height here. So we just broke impulsively, through this the weekly pivot here, rallied up to the R1. I think minimally locally you look at 160 and 184.50 are my local targets right here. But again, you should be looking then toward the top of the range up here at about 375. And once we're breaking out, it's blue sky territory and things can get kind of hairy. If you think Bitcoin is going to get a little wild, why wouldn't you think that everything kind of gets a little wild, right?
Yeah.
I mean, we know cycles.
I love when people, I love when people think that this time is going to be different and all coins won't go because Bitcoin's, and then you have like meme coins making 500, percent gains in a day. So I think we know that humans are going to human, and the casino's always open in crypto. But what else? Like Litecoin, it's funny. I always get the comments are like, when we start talking about Litecoin, it means it's the top.
Yeah. Well,
only when it actually goes up to the top. Only when Litecoin tops is at the top.
Yeah, there you go. And we understand people, and then they feel they a lot of people bring in narratives that they think are true. They haven't really researched them, just things that we've repeated over and over throughout the cycles. But again, I don't worry about that kind of stuff. I look at the charts and say, well, here's what I'm looking at. Here's what the charts are saying to me, and that's what I do, and it works out pretty damn well. So, people are talking about Tau here. I've seen that. I've got this on a movement up here, minimum 1,056, secondary target at 1,255. So just kind of looking for a breakout here above, what is this, 734 here. We coming in sideways between the pivot and the R1. We kind of pulled back to this previous support here. We're getting these dojis. Looks like it wants to rally. We've got reset down here and oversold on the daily Stochh RSI. RSI remains bullish above neutral. I mean, everything says it wants to go up further. So I think we've got further on that. It looks good to me. And by the way, that's just the wave 3. So, we'll get the wave 3, we'll get a wave 4, and then we'll get a wave 5 from there. I've also got.
Yeah, go ahead.
Do it.
No, I keep seeing a lot about Tau. It's one of those that I kind of missed, but socially I can tell there's a lot of engagement on it and interest. Yeah.
Yeah, exactly. I've got this IMGNAI. I don't know. Maybe it's IMGNAI. I don't know. I have no clue. But the chart looks pretty decent. It looks like we've got 4 is done or 4 is printing a triangle here. So looking for 5 of 3 up here at about 0.07162. Pull back for a wave 4, right back around kind of where we're at down here. And then wave 5 up there at 0.09550. So, from now, it'll get you basically 100% from where we're at here. These are not time-based, by the way, for those of you looking here. I don't do time-based. I just give you the levels here. I just kind of space them out a bit so they're easy to see. But yeah, so I think that one's looking pretty good there. We're just about to break into an all-time high here. So we had this high.
The charts are
all-time
crazy.
High back here in November. Yeah. So we're getting ready to break out on that. This is just this local count here. Generally, what I'll do is I'll take this kind of pullback here on a target there, almost like what you would do the cup and handle. Almost, it's just a target based on the pullback here. But instead of doing 100%, I look at the 1618. So that gives us a 14-cent kind of target up there as well, and potentially further. So I think it looks good. Overall, get a little pullback here, probably, finishing up this sideways and then higher there. What else do I got here? I've got MPL USD. Again, I don't know what it does.
Yeah. Well, actually, I've had Sid Powell from Maple on quite a few times, and they're really actually awesome. So there you go.
All right, so you know what it does. Okay, so there.
Yeah,
Scott knows what it does. I don't.
Not that it matters, but I do. Yeah, tokenizing real world assets. Yeah, very cool stuff. Go ahead.
Yeah. So I like it. We got the wedge here. We got the nice break of the wedge. Rallied up through the pivot here on the daily, all the way up to the R3, pull back the R1. Ultimately, once we can get this breakout above, what is this, 1877 here, I'm looking at 2755 and then 3620. Those are my local targets on that right now. But they had a great accumulation period here from February 6th through the breakout here on about November what was that, November 3rd? Yeah. So this was last year. Great long accumulation period here. You got your jump across the creek here, which is just your breakout, right in this area through your resistance. Looks good. You got basically your backup here looking to head further. I like it a lot. And let me see here. What else we got? No, not that one. FTM here. FTM's another one I keep getting asked a lot about. Again, another great accumulation period going on here. Back here from November of 2022. And we're just now breaking out up here. I've got a wave 3 target minimally up at around $2.11.5 right now. And that's a minimum target, guys. That could overextend here on the way heading up. But that would give us about 5 waves up around the swing high, all-time high there, which is usually what we look for in that first kind of sub-wave up. So, yeah, I think, well, that would be 5 of 3 here to get us up there. This bigger 3.
I'm struggling to find.
So it looks really good.
Yeah, I'm just struggling to find the ones that are lagging. Like everything looks, now it's like breakout retest. It's very hard to find anything that's still finding a base or accumulation anymore. This market is,
yeah, you got to,
the train's left the station. Yeah.
Yeah, if you're a trader now, it was easy. Well, see, here's the thing. It was easy before when they were all setting up like that. If your emotions didn't get in there and keep you from doing it, right? The setup was easy. Now your emotions are going to make it difficult because it's like, oh God, well, what if it's topped out? What if I buy the top and it drops back on me, right? And
I made a whole Twitter post about that, and I ranted about that, about how we talked about it yesterday. Bull markets are much more stressful than bear markets because you have to actively make decisions. It's easy to slowly buy and accumulate with whatever you have in the bear market and have conviction it's going to go back up. Now you're always fearful that that paper number at the top of your portfolio is the very top and you've missed it. And it's very hard.
Yeah, exactly. So, yeah. Anyway, I agree with you, man. It is. It's tough. It's tough. It is. People think everybody's a genius in a bull market. Well, they're a genius saying price is going to go up. They're not a genius trying to trade it. Most people are still going to be lucky if they break even after a bull market, which is sad, but it's the truth, So, yeah.
Yeah, absolutely. You got anything else?
No. I see a question here. Somebody's asking about Link, and they said,
why like under it hasn't. It just moved first.
Yeah, exactly. Link's still going, guys. I wouldn't be unhappy with Link. So it's one that I've shown many times before. We talked about it being a buy there on that dip. That $4 or $5 area. Man,
let me show something really quick. I'm trying to navigate this tiny computer, but this is Injective, guys, right? Yeah. And so Injective, like Link, was one of the first movers of this market, ahead of everything else, ahead of meme coins, ahead of nonsense. And it topped, quote unquote, top tier in December. So 3 months ago, and it's basically just reaccumulated for 3 months. And I had people saying, Injective is one of your biggest positions. It's so boring now. What's going on? Well, now it's made a new all-time high and it's in blue sky breakout. Guys, after these huge moves like a Link, you could take profit at the top of that move, move those assets somewhere else that you think has more. But just because it's topped and accumulated for a while does not mean that the top is in and that you should exit the market. You just need to be a little bit patient. It can't go up every single day.
Exactly. But patience, that's the key word. That's what, as human beings, we're emotional. It's tough, man. It's tough to be patient, right? Especially if you don't have any practice doing it, not just in trading, but in life. We're always impatient in everything. Social media doesn't help. We want information instantly. We want, 5-second clips now, and it makes trading very difficult, guys.
And
one of the best
skills. And you're watching people make 1,000x a day gains, which is probably fake on X, which you never saw in the past. You were happy with your 10% a year when I was growing up,
Oh yeah, we talked about that a lot when I first started TWC there, how, man, we would have loved in stocks. If you're getting 10, 12% a year, you're like, yeah, I'm killing it.
Now, if you haven't done it in an hour, you're literally pissed and asking influencers if you should exit. It's unbelievable.
Exactly. It's sad. But hey, guys, listen, if you're going to trade, honestly, one of the biggest things you can work on is patience. It really is, especially when you're in a bull market. You're going to have pullbacks. You're going to have reaccumulation periods. It's going to get boring. Go get a hobby. Stop trading out of whatever you have, thinking you're going to get something out because it's popping, and then you jump in on that at the top, and then you're holding as it's falling down and you're losing money, and then what you were originally in, finally starts taking off. Story as old as time, I guess, right there.
Yeah, man. All right, Chris. Thank you so much. Everybody follow Texas West Capital. I see Fibbo Swanee, your buddy over here. Good morning.
what's up,
Had him
Fibbo?
on before, of course. You guys have a whole bunch of new stuff going on, by the way, right?
Oh yeah, man. We've got we just released a new monthly subscription product. So we do our group coaching for 3, 6, or 12 months. But if you're interested more on doing it on your own, and you get one group coach session a month and whatever, and all our education, everything, and an amazing community, you can jump on that. Now it's our C3 charts courses community subscription, and that's just a monthly thing, $97 a month. So yeah.
Awesome, man. Guys, you should all absolutely check that out. Chris, thank you as always for all the alpha. Oh, go ahead. Got a point.
And real quick, you can jump on Fibbo's threshold theory as well over there at members.texaswestcapital.com.
Nice. I like that you got him in there since he's over
Got
here
you.
always.
Yeah.
And he said, as Guns N' Roses said it best, patience. Yeah.
That's right.
Yeah. Awesome. All right, man. Thank you, Chris. Guys, I'm going to let you go, Chris, say a few more things. All right, guys. So listen, obviously we had the Alpha Show. That's going to be every night at 9 p.m. Eastern Standard Time. I know it's hard to get used to looking at a different, more handsome face on the channel, but that is Joe. And to be showing up in the middle of the night, I think, for a lot of you, but I highly suggest you watch that back. Today, I am still doing my afternoon show with Wick, Trading Alpha, of course. So if you like Chris's Trading Alpha, I got more Trading Alpha this afternoon, which should be amazing. And finally, before I go, we got to just do this one more time. We have to. We're going to do it on the way out. If it works. It's not working now, is it? Is it working for you guys? Can you see it? It's not working. Dang, I was going to play the little bubble track again. Maybe you guys see it, but I don't see it. If it is working, it's not working for me. Oh, well, guys, that was an amazing show. We had Matt Hougan, James Butterfill, and Chris. Thank you to all of them. I will see you guys on Spaces in 20 minutes. And then this afternoon, 3:30 p.m. Eastern Standard Time for Trading Alpha.
That's dope.